bet. Today is the 11th of June, being a Thursday, and in relation to the economic calendar, we had high impact news at 8:30. So we had core PPI. That was the high impact news event for today. So simply just going to be taking a look at the two trades I took during the AM session. So took a long position and then I took a short position. So we're going to go over the long position first, and then we're going to take a look at the short position right after as well. So in relation to the short position, this was an inception continuation model. New York AM was the session it was traded in. M15 BSC was utilized. The first presented fair value gap of the PM session from Wednesday was utilized to form that point of inception. An M1 standard deviation was projecting for sell side in order for us to determine a point of inception. 15-second change in stain delivery was the entry mechanic, and then I had a 15-second standard deviation projecting for buy side. And Devil's Merc was the exit of the trade, and then London was the draw on liquidity. So jumping in, taking a look at the analysis. So observing that M15, since this is a continuation model, a story essentially has to be built, even if it isn't a continuation model and it's just inception model itself. A story still has to be built, but in relation to continuations, I do feel as though a story has to be built in terms of from this segment of price action here in order for us to say, okay, we can look to continue that buy side delivery motion. But we have that deliverance up towards buy side ever since that 1800 opening, and we end up seeing London forming its high right here, and London falls short of engaging with this M15 imbalance. So we create relatively equal highs in relation to this M15 imbalance with London high, and then we begin to grind down towards sell side. So at this current point in time, naked eye, it's around 4:30. This is ahead of our high impact news event at 8:30. So we're having this very high resistance deliverance down towards sell side. So we're just simply forming a TLP right here. 8:15, we end up having a very aggressive candle down towards sell side. 8:30, continuing that aggressive movement down towards sell side. And we see that 8:30 ends up engaging with this M15 BSC as well as the London low. So London low comes in right here, and a cracking correlation presented itself. So YM failed to engage with the London low, while the correlated assets to YM engaged with the London low. In this case, NASDAQ engaging with the London low. Another thing as well is the fact that from this candle's low all the way up to this candle's high is a range that we are delivering back into. Equilibrium coming in right here, OTE coming in right here. So we have a equilibrium cracking correlation, and this is a form of cracking correlation in relation to correlated assets diverging from one another. So ES ends up delivering under a premium of this given range while NASDAQ fails to follow suit. NASDAQ engages with the London low while YM fails to follow suit. And where price action was located at this 8:30 candle would have been inside of this M15 BSC, as well as the first presented fair value gap from the PM session on Wednesday, which would be the previous day's trading. If you're someone that has been consistently watching my videos, I've just previously stated the fact that a cracking correlation was established here at YM. And in some of my videos, I state the fact that if a cracking correlation presents itself at YM, I'm not really looking to trust it. The only times that I do trust it is when the highs and the lows are formed at the exact same time. So YM formed its London low, the same time NASDAQ formed its London low. YM formed a swing low, the same time NASDAQ formed a swing low, engaging with that London low. That is when I can look to trust the cracking correlations with YM, NASDAQ, and ES, when the time of the swing high and swing low are in sync with each other. But moving on away from that small little tangent and dropping down into the M1. So taking a look at the M1, we have that 8:30 deliverance down towards sell side, engaging with that M15 BSC, as well as the first presented fair value gap from the PM session on Wednesday. And then we have a return back into the range. So we return back into the range, and then price action is simply just stalling here. We're waiting for time being 9:30. So 9:30 naked eye comes in right here. 9:30 we open, and what we take notice to what 9:30 does is 9:30 opens, delivers towards buy side, and doesn't engage with any prominent pool of buy side liquidity, as well as the fact that the 9 a.m. candle, being this candle right here, did not form a sufficient high. So 9 a.m., the hourly candle opens, and we just simply continue that deliverance down towards sell side in a very high resistance manner for 30 minutes. 9:30 opens, we simply engineer more buy side, and then we continue that deliverance down towards sell side. So 9:30, we're engineering buy side, trendline phantom residing right here. We continue that deliverance, engaging with this M15 BISI again, as well as the first presented fair value gap from the PM session. With this deliverance down towards sell side, cracking correlation was established here. So ES engages with this low, NASDAQ fails to follow suit. And then dropping down and taking a look at the 15-second, which is where the execution was. So we had that deliverance down with NASDAQ failing to engage with this low. So we deliver down, NASDAQ fails to engage. We drop down to the 15-second, same deliverance down, same failure to engage, and then a second stage cracking correlation presents itself right here. So again, NASDAQ fails to engage with this candle's low, while ES engages with that candle's low. Change in staying delivery presents itself right here. Simply market executed the moment we engaged with the change in staying delivery. Standard deviation anchored to this candle's low, all the way up to this candle's high, projecting for that -2, -2.5, which is where we see a reaccumulation of orders on the M1. So we deliver down, engage with an M1 BISI, as well as the M1 first presented fair value gap for the AM session, and then we continue that buy side delivery motion to engage with the devil's mark of that 9 a.m. candle, as well as that London high that resides right here. Something I also forgot to touch on would have been the standard deviation I was projecting for sell side on the M1 in order for us to determine this being a point of inception. So the standard deviation will be anchored from this candle's high all the way down to this candle's low, -2, -2.5. We're seeing it's projecting for this M15 BISI high to be a point of inception. And with this standard deviation, cracking correlation presented itself here as well, and with YM again. I think maybe I can explain it a little bit better, but YM formed a swing high the same time NASDAQ formed a swing high in this candle. YM formed a swing high the same time NASDAQ formed a swing high in this candle. NASDAQ engages with this swing high. YM fails to follow suit. I can look to trust that as a valid cracking correlation because time is in sync in relation to all of the correlated assets. They're forming the swing highs and swing lows at the exact same time. The emphasis on this would be the formation of a swing high and a swing low at the same time. And simply just look to anchor a standard deviation to that, projecting for sell side. So yeah, that would be it for the first execution. There really wasn't much to it, so we can simply just jump straight into the second execution of the AM session. So with the second execution, this would have been Inception model taken during the New York AM session. We were framing a 10 a.m. power of 3. An hour 4 rejection block was utilized. M15 SIBI was also utilized as well. M15 body standard deviation was projecting for buy side in order for us to locate that point of inception for sell side delivery motion. M5 body standard deviation projecting for buy side, same situation, in order for us to locate that point of inception for that sell side delivery motion. Entry mechanic would have been a 15-second change in staying delivery, and then there was an M1 standard deviation projecting for sell side, and simply look to exit the trade at the M1 discount BISI, as well as, I'm just realizing this is actually laid out wrong. There was also an M5 body standard deviation projecting for sell side, but exited at the M1 BISI that was located in a discount, and then the opening range gap was the drawn liquidity. So jumping in and taking a look at that trade, so observing the hour 4, here we have that rejection block from the previous day's trading. We've seen price action deliver into it, and then we form a point of inception for that sell side delivery motion above our hour 4 rejection block. Now, if we just pay attention to this hour 4 chart, we're utilizing a rejection block here. Why is this a valid rejection block? What has this candle done that is of significance in which we can look to trust this candle being used efficiently as a rejection block? If we're observing this candle, for one, this is a 10 a.m. candle. What has occurred here is a very, very fascinating concept in relation to time and price in terms of times referring to each other. We're seeing a 10 a.m. candle as well as a 10 a.m. candle referring to each other. But not only that, Observing just this 10 a.m. candle, we can take notice of the fact that we deliver into this hour 4 imbalance and we utilize it in an efficient manner. This is where I took the short position during yesterday's trading. We shorted utilizing this hour 4 imbalance. Rejection block, we shorted utilizing this rejection block. And then dropping down, taking a look at the M15. So we have that hour 4 rejection block projected out in time. And we can also take notice of the fact that your hour 4 rejection block is your M15 order block. So these series of up close candles right here. And then there was also an M15 SIBI in which we were also looking at as well to locate that point of inception for that sell side delivery motion. Cracking correlation established itself here. So NASDAQ engaged with these highs. ES failed to follow suit. And then M15 standard deviation projecting for buy side. So it would be a body standard deviation, which would be anchored to this candle's open all the way down to this candle's close. That would be your M15 body standard deviation projecting for buy side. We see that -2, -2.5 being utilized for that smart money reversal. And we were also framing a 10 a.m. power of 3. So we see 10 opens. We were looking to see a open, high, low, and then close for that 10 a.m. candle. And then observing that M5 chart, we have that deliverance up towards the buy side, engaging with that hour 4 rejection block, as well as the M15 SIBI. 10 a.m. opening coming right here, being the candle to engage with that hour 4 rejection block. We can take notice of the fact that before 10 a.m. opens, we form a swing high on this candle right here, which falls short of engaging with that hour 4 rejection block. So you could view this as the engineering of buy side. The only thing that we're paying attention to here on the M5 would simply just be standard deviation. So we have another body standard deviation projecting for buy side. So from this candle's close all the way up to this candle's open, that is where the body standard deviation is anchored. And it's simply in alignment with the M15 as well, that -2, -2.5, aligning with that M15 -2, -2.5 body standard deviation. And then another standard deviation projecting for sell side would be from this candle's close all the way down to this candle's open. And we see that -2, -2.5 coming in right here. And then dropping down, taking a look at the M1 chart. So we have that deliverance up, engaging with that M15 SIBI, hour 4 rejection block, as well as the -2, -2.5 standard deviation levels. A cracking correlation ends up presenting itself inside of this M15 SIBI. So cracking correlation, NASDAQ engages with this candle's high, ES fails to follow suit. And what we can take a notice to is the fact that after the engagement, we end up having the formation of an order block. So series of up close candles, series of down close candles. Now in this case, you can really just say one up close candle, one down close candle, because this is an indecisive candle. And we know that in relation to indecisive candles, we're not counting them in the sequence of the formation of an order block. But with this execution, I didn't execute off of the M1, I simply executed off of the 15-second. But we had that cracking correlation, and then there is also a standard deviation that can be anchored to this leg right here. So from this candle's high all the way down to this candle's low is where the standard deviation is anchored, giving you your -2, -2.5, -4, -4.5. And we can take an acknowledgement to how that -2, -2.5 is in alignment with that 10 a.m. opening. So we see that 10 a.m. opens, we don't form a sufficient low. We simply just deliver up towards buy side, engaging with that M15 SIBI as well as hour 4 rejection block without forming a sufficient low for that 10 a.m. candle to continue that buy side delivery motion. -4, -4.5 projecting very nicely for this M1 BISI that was located in a discount. So naked eye from this candle's low all the way up to this candle's high, equilibrium coming in around here. Our M1 BISI is located in a discount. Unfilled M1 BISI, as well as the fact that we see sell side residing just above it as well. So very clear drawn liquidity in relation to this internal range. And then observing the 15-second where we took the execution. So we had that deliverance. We're engaging with that hour 4 rejection block, M15 SIBI, cracking correlation presents itself. And then we have a 15-second change in stain delivery. So series of up close candles, series of down close candles, 15-second change in state, and simply just look to market execute the moment we engaged with these series of up close candles, stop loss simply being at this high because I'm deeming this high protected. In terms of if we were to engage with this high, the idea that I am trying to frame is wrong. So we end up engaging with this 15-second change in stain delivery, the distortion of price ends up occurring here. So during the segment of price action, it's time. In relation to the 30-minute window, we're looking for reversals to take place. So it's not the distortion of time that's going on here, it's the distortion of price. And with the distortion of price, once that distortion phase is over, price is going to expand in a very, very fast and willing manner, in which we end up seeing here. So the way I view the distortion of price is you simply just have to imagine it as if it's a bar being charged up. In relation to the distortion of price, I mentioned it just simply being a charge up bar. You just view it as if price is loading up in order to have a spool like this in terms of a very nice, smooth, low resistance liquidity run. Especially when we are operating under the notion that this should be a point of inception and sell side delivery should occur from here. There are clear drawn liquidities at the opposing end of the market. And then the last chart simply just being a 5-minute chart, and this would be the regular trading hours in which I was deeming the drawn liquidity. So the execution would have been taken right here, would have exited somewhere around here, simply looking for this regular trading hours opening range gap to serve as the drawn liquidity. So that -2, -2.5 of the M5 standard deviation anchored to the body. So from this candle's close all the way down to this candle's open, projecting for inside of that regular trading hours opening range gap. But yeah, that would be it in relation to today's executions.